want to do a quick recap on the GU trade that I just took. So we'll give kind of the context, reasonings why I took the trade, talk about entry, and then how risk was managed throughout. So first thing I want to point you guys to is this gray box that I have outlined. And I'm sure as you guys can see, what I'm basically outlining here is just an area where every time price kind of comes into this region, you find some sort of support or resistance, and a move away from the level usually kind of occurs. So you get kind of reactions at the level. Every time price is in this region, it's given reactions in both directions. Okay, so it's a sensitive area where price is reacting from, and I want to take note of that. So the first thing I say to myself is when I see something like that, trading in the zone specifically, kind of want to avoid it. Want to be looking for trades that are going to be either outside of the zone, or like if you get some sort of bias that could put you on to take a trade, that would capture one of these moves that have occurred kind of like from the reaction of the zone. So that's the first thing I just want to kind of point out to you guys. The next part that I want to point out on a daily perspective is you can see that, price had obviously traded up and in. You got a reaction. Price broke up, came back, tested it as support here, and then pushed away, right? So most recently, again, price is respecting this gray box as, you could even call it just SR when you're looking at it here, okay? When price, reacts from here, it then breaks down. Okay, so I'm looking at it saying, okay, from everything we know, looking back, like we just did, price typically has reactions from this area. So, here you got the reaction to the upside. Price now just broke through, so you'd kind of expect price to start having a reaction to the downside. Okay, that alone, though, is not enough to get me on board a trade. It's just more of like an observation and something to kind of start making you monitor price. All right. The other thing I'm going to point out here is there's a daily swing low. So let's get rid of this gray box for now. You have a daily swing low. Okay. Price obviously creates a low. Here, price starts breaking down below the daily swing low. A couple days ago, you had a daily close back above that daily swing. So obviously, and then we're in the gray box. So to me, I'm not looking to short that. Okay, you've now recaptured a daily swing low. You're in the middle of the gray box. I'm just like, okay, let's see what price does. Yesterday, price creates the bearish engulfing candle here, and it breaks back down below the daily swing. Okay, and then it also breaks below the region of that box that I drew. So you get a couple things happening here. One, you've closed back below the daily swing. You've had the reaction from the box, and you got a bearish bias candle. So to me, now I'm saying, okay, I really need to be now looking for this, because this could be that reaction that you get away from the zone. Okay, so I know it's a kind of a muddy context, but it's important to understand that you're not just pattern hunting. You're looking for context. You're looking for reasons why you're taking this trade at this area. So I'm trying to paint that picture for you guys. So again, breaks the daily swing low. You get the reaction off of the zone with the box. You have a bearish bias candle. So I mark out the low of the day prior to the bearish engulfing candle right there. Usually it's a very sensitive price point and you can get a reaction from it. I do not take the trade off of that level. I will always try to refine on the hourly candle, or from hourly chart, sorry. So we drill down to the hourly. Actually, just to circle back, target for me is very, very clear. It's just these swing lows. That's all I'm looking for, right? This was the low that was created before the reaction. It's a natural place. I don't have any other, trouble areas other than that. That's the next closest trouble area, so that's why I chose that as my target. Hourly. So I know this is a little bit messy right now, but what we're seeing here is the pink level again was the low of the day prior to the bearish engulfing candle. You see here that you have a couple of lows, okay? So price breaks those lows here, and you get a couple bar lows right here, right? So you call those, and that could be, it's just like you kind of your last lows before the breakdown of these here. Okay, so a couple ways that you could have traded this really. A lot of people will trade it as a level here, so the somewhere's in here they'd look for it. I'm choosing to trade the last low pre-break, so that's why I've marked out that gray, and it's an hourly candle. You can see the upper gray is the daily swing low. Okay, so to me, it's just a matter of there's your entry. I know where I'm getting, where I'm entering the market on this trade. When it comes to stop, I want to be above, any sort of region where I think, okay, there's going to be some congestion, there's some trouble areas. So, anything really in this kind of region, I really want to be above because you're getting, reactions, all over here, and I don't want to get stopped out into that cluster. Okay. So for me, I just go back a candle. Okay. So I'm entering on the, at the low of this candle here. If I put my stop above this candle, am I out of the way? And for me, it is. I'm out of the way. I'm out of the way of the cluster zone here. I'm above the daily swing low, which is key for me. So that was a perfect region for me to put my stop in. So entry was there, stop was there. You guys know where the target is, so it was very easy to understand the trade from there. Okay. Management of this trade is a little different. So, candle closes here. It's kind of hovering around this. I get filled late at night, so I'm in bed. I get filled on the trade. Price pushes away. What happens here is there's a level here. And this is important to understand this too, because you don't want to be closing trades for no reason. But there's a level here like this. Okay. So price had come down, hit the level, pushed back up, giving you the fill. It then broke the level again, okay? And what I would have been watching for, I mean, I'm in bed at this time, but let's just say I was up. I would have been watching for price to react here from the underside, start moving away, and then I would have moved my stop down. But obviously, as you can see, the hourly candle breaks right back above, okay, and comes nearly back up to your entry. It does come back up to your entry. At that point, again, I'm sleeping, but if I was up, I would have said, okay, what I really don't want to see is an hourly close above this swing high, because the thing you don't want to see is your entry level starting to get used as support. Okay, that is that's like the worst thing you can happen to see. So what happens is you get a sweep of the high, price pushes up a bit, and then closes. Obviously, you get an SFP at the level, and then price starts to break down. So that's fine. So I wake up somewhere's around this, somewhere's between these two candles. I'm waking up and looking at price, and I'm saying, okay, so we had that reaction. We had this sort of move. My stop gets moved to here. It's kind of a bit of a shooting star. It swept this, the swing high over here. So price to me, this is showing I'm moving my stop down. Okay. Then what happens is price starts to break down, and you can see you get the close below, and it retests, okay? And then you kind of get this rounded retest here. It's not really rounded, but, for lack of a better words, we're going to call it rounded. It comes back up, okay, then starts to push. As soon as I see this candle here push up and retest, I'm like, okay, you get two things happen here. One, you're getting the retest of the level, but you're also getting what I would call like an hourly shooting star, okay? So that's important to me. So I watch that. Now again, I'm not just moving stop blindly to this level yet, but as soon as this low breaks here, as soon as this hourly candle broke, broke that swing low here, I moved my stop to this high, okay, the high of the shooting star. And I said to myself, that's a good stop. Now, obviously, you can tell what happened. Price, had a pretty violent move to the downside, okay, and then closed the hour down here. Now, I closed the trade. Trade got instantly closed there, and it's important to understand this why. So, you've seen trade management so far. So I've moved my stop, original stop, moved my stop once, moved my stop again, and then price had a violent move and we closed down here. The reason I closed the trade was because of evolving R. Okay, so as you're in a trade, your R tends to get, your R changes. It's not just a one and done sort of thing. So for me, I'm looking at it saying, okay, if I'm having my stop here and the market closes here, okay, what's really the risk? Well, the risk for me is that from the close of this hourly candle, it's about 10 ticks or 10 pips to my target. But it's about 34 pips or ticks back to my stop loss. So, am I really going to risk 34 ticks to potentially make 10 more? To me, it's no. I'm not going to do that, right? I'm not going to do that. The other way I look at this, for visual people, I would move my R tool here, and I would say, okay, if I entered the market right here, if I had my target the same at purple, and I put my stop here, and you treat this as a new trade, would you take that trade for zero point 0.3 of an R? No, you absolutely wouldn't take that trade. So when you're starting to get stuff like this, when the R is starting to change and be very, very poor, you have to start asking yourself, what am I really doing? I'm going to give back 34 ticks to make 10. No, that's not going to happen. I don't want any part of that. So for me, close the trade. And it just happens to be that you can see right now what I'm talking about, right? Even if price dumps from here, that's fine. But look what happens, right? Price has now moved back up to the upside, and now you're the things look a lot different now, right? Now there's a lot of people that are hoping, well, I hope this comes back down. I hope this comes back down. Realistically, it could happen that a couple of things could happen. One, this either just barks back up and takes you out. Two, this could drift like this for the rest of the day, right? And then here you are on a Friday. The afternoon's going to start being, get into, low volume time. And, people are going to start being away from their desk. So you're telling me you're going to risk that? Not a chance. So, anyways, just thought I would talk to you guys about that as well. So, hope that gives you guys, I know it's a long winded trade and spiel, but I thought it would cover a lot of things that I'm looking at, I'm thinking, how I manage the trade, all different aspects of it. So, hope that gives some value. Feel free to comment, send me messages, ask me about it. Happy to talk more. Cheers.